Hello, everyone, and welcome back to English Together, the business English podcast that helps you communicate with confidence and advance your career. I'm Paul.
And I'm Olivia. Paul, I have to tell you about something that happened in a client meeting last Thursday that perfectly illustrates why today's topic is absolutely critical for non-native English speakers.
What happened?
I was coaching Maria, a finance director from Mexico who works for a consulting firm in Toronto. She'd been asked to present quarterly budget projections to the executive team. Maria speaks excellent English. Her numbers were perfect, her analysis was solid. But she told me afterwards that she felt like she was speaking a different language than everyone else in the room.
How so?
She kept using words like money, expensive, and we can't afford this. Meanwhile, the American executives were using phrases like capital allocation, resource constraints, and ROI considerations. Maria said, "Olivia, I felt like a child talking about allowance, while they were having a sophisticated business conversation. I know my analysis was good, but I sounded unsophisticated."
This is such a common challenge, and it's not about Maria's English proficiency. It's about understanding that in professional English, especially in financial discussions, native speakers almost never use simple, direct words like money or expensive. They use strategic, sophisticated language that sounds more objective, analytical, and professional.
And here's why this matters for your career. When you're discussing budgets, financial projections, or resource allocation, the language you choose signals whether you think strategically about business or whether you're just focused on numbers. Using sophisticated financial vocabulary makes you sound like an executive, not just an analyst.
That's exactly why today we're teaching you the 7 strategic financial phrases. These are 7 specific expressions that will transform how you discuss money, budgets, and financial projections in professional settings.
By the end of this episode, you'll sound sophisticated, strategic, and executive-ready in any financial discussion. Let's dive in.
All right, Olivia, let's start with strategic phrase number 1, which is resource allocation, or allocate resources. This is how native English speakers talk about spending money or distributing budget without actually using the word money.
This phrase is brilliant because it reframes financial decisions as strategic choices about resources rather than emotional decisions about money. When you say, "How should we allocate resources for this project?" you sound like a strategic thinker. When you say, "How much money should we spend?" you sound much less sophisticated.
Let me give you concrete examples across different contexts. In a budget planning meeting, instead of saying, "We don't have enough money for both projects," you'd say, "We need to make strategic decisions about resource allocation. Given our constraints, should we fully fund project A or split resources between both initiatives?" See how that sounds more analytical and less like you're just saying no?
Perfect example. In an email to senior leadership, instead of writing, "The marketing department wants too much money," you'd write, "We need to discuss resource allocation across departments to ensure we're investing in the highest impact initiatives. The current marketing budget request would require us to reallocate from other strategic priorities."
Notice how that frames it as a strategic discussion, not a complaint about money. In an informal conversation with your team, you might say, "We need to be smart about how we allocate resources this quarter. Let's prioritize the initiatives that will have the biggest impact on revenue."
Even in casual settings, using allocate resources instead of spend money makes you sound more strategic. The common mistake learners make is mixing registers. They'll use sophisticated language in one sentence and then say, "But we don't have money for that," in the next sentence. You need consistency.
Another mistake is overusing this phrase. If you say allocate resources 5 times in one email, it starts to sound unnatural. Native speakers vary their vocabulary, which brings us to strategic phrase number 2, capital investment or invest capital.
This phrase is specifically for larger expenditures or long-term spending decisions. Capital sounds much more professional than money. And investment implies you're expecting a return, not just spending. In a board presentation, instead of saying this project will cost $2 million, you'd say this project requires a capital investment of $2 million with expected ROI of 35% over 3 years.
See the difference? You're not talking about cost, you're talking about investment and return. In email context, you might write, "We're evaluating 3 potential capital investments for next fiscal year. I've attached the financial analysis showing projected returns and payback periods for each option."
In meetings, when discussing whether to purchase new equipment or technology, you'd say, this represents a significant capital investment, so we need to carefully evaluate the long-term benefits against our other strategic priorities.
And informally, discussing a potential purchase with your team, before we move forward, let's think about this as a capital investment. What's the expected lifespan? What's the ROI? How does this compare to leasing?
The mistake here is using capital investment for small, everyday expenses. You wouldn't say we need to make a capital investment in office supplies. That sounds ridiculous. Capital investment is for significant long-term expenditures.
Let's move to strategic phrase number 3, which is budget constraints or working within constraints. This is how you professionally say we don't have enough money without sounding negative or like you're making excuses.
This phrase is essential because it acknowledges limitations while maintaining a problem-solving mindset. When you say, given our budget constraints, we need to prioritize, you sound strategic. When you say, we can't afford this, you sound defeatist.
Here's how this plays out in a planning meeting. Your team wants to hire 3 new people, but you only have budget for 1. Instead of saying, we don't have money for 3 people, you say, I understand the need for additional headcount, and I want to find solutions within our current budget constraints. Let's discuss which role would have the highest impact, and we can revisit the other positions in Q3 when we review budget allocations.
Perfect. You acknowledge the constraint, but you're focused on solutions and future possibilities. In an email to a vendor who's proposed an expensive solution, you'd write, thank you for the comprehensive proposal. We're working within some tight budget constraints this quarter. Could we discuss a phased implementation approach that would allow us to begin with core functionality and expand over time?
You're not saying no, you're proposing creative solutions within constraints. In a presentation to executives, you might say, we've developed 3 implementation scenarios to accommodate different budget constraints, ranging from a minimum viable product approach to a fully featured rollout.
And in informal team discussions, I know budget constraints are frustrating, but let's get creative. What could we accomplish with existing resources if we reprioritized our time?
The common mistake is using budget constraints as an excuse to shut down conversations. If you constantly say budget constraints without proposing solutions, you sound like you're not really trying. Native speakers use this phrase while simultaneously problem solving.
Now let's talk about phrase number 4, financial projections or forecasting. This is how you discuss predictions about future money without using informal language like we think we'll make this much.
Financial projections sounds analytical and data-driven. In a quarterly business review, instead of saying, we think revenue will be about $5 million next quarter, you say our financial projections indicate revenue of $5.2 million for Q2, based on current pipeline and historical conversion rates.
See how much more credible that sounds? You're not guessing, you're projecting based on data. In an email to your finance team, you might write, I need to update our financial projections for the second half of the year. Can we schedule time to review the assumptions and adjust based on Q1 performance?
In meetings, when discussing future plans, before we commit to this expansion, let's review the financial projections. What are we assuming about customer acquisition costs and lifetime value?
And in informal discussions with your team, the financial projections look strong for next quarter, which means we might have budget for that training program we discussed.
The mistake learners make is saying financial projections, but then presenting numbers without any supporting rationale.
Projections require justification, assumptions, and methodology. If you say, our financial projections show $10 million in revenue, but can't explain how you arrived at that number, you lose credibility.
Let's cover phrase number 5, cost-benefit analysis or evaluate the ROI. These phrases show you're thinking beyond just the price tag and considering value and return.
Native English speakers rarely make decisions based on cost alone. They always frame discussions around value received relative to cost. In a meeting about whether to attend an industry conference, instead of saying, the conference is too expensive at $5,000 per person, you say, let's do a quick cost-benefit analysis. The conference is $5,000 per person, but we'd gain access to 3 key prospects, competitive intelligence, and professional development. Given those benefits, does the investment make sense?
You're not saying yes or no, you're creating a framework for rational decision-making. In email proposing a new tool or software, you'd write, I've completed a cost-benefit analysis of the 3 leading project management platforms. While Platform A has the highest upfront cost, it offers the strongest ROI over 24 months when we factor in time savings and reduced errors.
In presentations to leadership, you might say, we've evaluated the ROI for each initiative. This slide shows the expected payback period and cumulative return over 3 years for each investment.
And informally, before we commit to this, let's think about ROI. What's the actual value we're getting?
The mistake is using these phrases without actually doing the analysis. If you say, I've done a cost-benefit analysis, but then can't articulate specific costs and benefits, you damage your credibility.
Phrase number 6 is optimize spend or spending optimization. This is sophisticated language for use money more efficiently.
In budget review meetings, instead of saying, we need to cut costs, say, we're focusing on spending optimization to ensure every dollar drives maximum impact. In email, I'd like to discuss opportunities for spending optimization in our vendor contracts. I've identified 3 areas where we might negotiate better terms without sacrificing quality. In presentations, our spending optimization initiative has identified $200,000 in potential savings through process improvements and vendor consolidation.
And phrase number 7 is fiscal responsibility or financially prudent. This is how you talk about being careful with money without sounding scared or cheap. In meetings, I think the fiscally responsible approach is to pilot this program in one region before rolling out company-wide.
In email, while I'm excited about this opportunity, fiscal responsibility requires that we ensure adequate reserves before committing to this expansion. These 7 phrases transform how you discuss money in professional settings. Olivia, I think we need to talk about why English-speaking business culture has developed this elaborate vocabulary around money, because in many cultures, this might seem unnecessarily complicated or even evasive.
That's such an important point. In many direct communication cultures, particularly in parts of Northern Europe, Russia, or even some Asian business contexts, people might say very directly, that's too expensive, we're not buying it, or we don't have money for this project, and that's considered honest and efficient.
Right, but in American and British business culture, there's a deeply held belief that financial discussions should sound analytical and strategic, not emotional or reactive. When you use sophisticated financial vocabulary, you're signaling several things. First, that you're thinking strategically about business impact, not just reacting to price tags.
Second, you're maintaining what's called executive presence. Leaders are expected to discuss financial matters with composure and sophistication. Using simple words like expensive or cheap can make you sound like they're thinking at a tactical level rather than a strategic level.
There's also a cultural discomfort in English-speaking business settings with appearing to be controlled by money. When you say, we can't afford this, you sound powerless. But when you say, given our current resource allocation priorities, this doesn't align with our strategic objectives, you sound like you're making an empowered choice.
And here's the career implication. Professionals who master this sophisticated financial vocabulary are perceived as having executive potential. You're demonstrating that you understand how leaders think and communicate. When you're in a meeting with senior executives and you naturally use phrases like capital allocation and ROI considerations, you sound like you belong at that level.
This isn't about being pretentious. It's about understanding that in English-speaking business culture, the language you use around money signals your level of strategic thinking and business maturity.
And once you understand the code, you can use it strategically to advance your career and influence decisions. This entire conversation is reminding me so much of Maria, the client I mentioned at the beginning. After that executive presentation where she felt unsophisticated, she came to me really discouraged. She said, "I have an MBA. I understand finance deeply, but I sound like I'm talking about my personal checking account, not corporate strategy."
So, how did you help her shift her language?
We spent a month specifically working on financial vocabulary. We took her actual presentations and emails and rewrote them using the strategic phrases we've covered today. For example, she had written in an email, "The new CRM system costs too much money and we should buy a cheaper option."
That sounds perfectly clear, but not very sophisticated.
Exactly. We rewrote it as, "The proposed CRM system requires a significant capital investment. I've completed a cost-benefit analysis of 3 alternatives. Option B provides 90% of the functionality at 60% of the cost, which may represent a more optimal resource allocation given our current budget constraints and strategic priorities."
That's the same message, but it sounds completely different.
Right. We practiced these phrases until they felt natural for her. At first, Maria felt like she was being overly formal or using jargon, but I told her, this isn't jargon. This is the professional vocabulary of financial discussions in English-speaking business culture.
How did things change for her?
Within 2 months, her entire reputation in the company transformed. Her CFO specifically commented in a meeting, "I really appreciate Maria's strategic thinking around resource allocation." And here's what's interesting. Her analysis hadn't changed. Her numbers were always good. But now her language matched her expertise.
That's the power of vocabulary. Sometimes it's not what you know, it's how you communicate what you know.
6 months later, Maria was promoted to VP of Finance. Same analytical skills, same person, but she learned to communicate like an executive.
All right, everyone, we're going to practice these strategic financial phrases right now because you need them to feel natural and professional in your mouth. Olivia and I will give you 3 realistic business scenarios using the vocabulary we've taught today.
Listen carefully to each scenario, then pause and repeat out loud with confidence. Imagine you're in an actual business meeting. Use clear, professional tone. Ready?
Paula's scenario 1. You're presenting budget recommendations to your leadership team. Listen and repeat. Based on our financial projections for Q3 and Q4, I recommend we optimize our spending by reallocating resources from lower performing initiatives to our highest ROI programs. This approach maintains fiscal responsibility while positioning us for growth.
Excellent. Notice how sophisticated that sounds compared to, "We should spend less on some things and more on others." Here's scenario 2. You're responding to a colleague who wants to purchase expensive software. Listen and repeat. "I understand the value this tool could provide. Let's conduct a thorough cost-benefit analysis comparing the capital investment required against projected productivity gains. We also need to consider this within our broader resource allocation priorities for the year."
Perfect. You're not saying no, you're proposing a strategic evaluation process. Here's scenario 3. You're discussing budget limitations with your team. Listen and repeat. "I know we're working within tight budget constraints this quarter, but let's focus on spending optimization. Where can we achieve more impact with our existing resource allocation? I'd rather make strategic choices than arbitrary cuts."
Beautiful. Now, if you want more practice with sophisticated financial vocabulary, if you want email templates, presentation scripts, and a complete phrase bank for budget discussions, we've created the Strategic Finance Vocabulary Guide.
It includes all 7 strategic phrases we covered today, plus 15 additional advanced financial expressions, 50 example sentences for different contexts, and realistic dialogue for budget meetings, financial presentations, and executive conversations.
Download it completely free at englishtogether.com/finance. That's englishtogether.com/finance.
This guide has transformed how our listeners communicate in financial discussions. One listener told us, "My CEO asked if I'd taken an executive communication course because my language has become so much more sophisticated."
Go grab it now. englishtogether.com/finance.
Let's recap the 7 strategic financial phrases that will transform how you discuss money in professional settings.
Phrase 1. Resource allocation. Use this instead of spending money to sound strategic. Phrase 2. Capital investment. Use this for large, long-term expenditures instead of cost.
Phrase 3, budget constraints. Use this instead of "we can't afford it" to acknowledge limitations while maintaining a problem-solving mindset. Phrase 4, financial projections. Use this instead of "we think" to sound data-driven.
Phrase 5. Cost-benefit analysis or evaluate the ROI. Use these to show you're thinking about value, not just price.
Phrase 6, optimize spend. Use this instead of "cut costs" to sound strategic rather than reactive.
And phrase 7. Fiscal responsibility. Use this instead of being careful with money to sound prudent and professional.
If you start using just 3 or 4 of these phrases this week in your financial discussions, you'll immediately sound more sophisticated and strategic. Remember, this vocabulary signals that you think like an executive, not just an analyst.
Thanks for listening to English Together. Download your free strategic finance vocabulary guide at englishtogether.com/finance.
We'll see you next time. Keep practicing, keep growing, and keep speaking English together.